What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode I'm doing another stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we have the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with the price action on the SPY ETF, we saw the price come down minus 0.54%. And we still do have this gap below, which brings us all the way down to a price level of about $329. So the price action did close right above that 50 EMA and right on that 13 EMA. And the price action still below that 20 simple moving average. We still have that 5 EMA trading below the 13 EMA, which tells us that we still have that bearish trend, and we still have a negative sloping 20 simple moving average, which also tells us that we have that bearish trend. So we're not out of the clear yet, and we still have a downward trending market, and we also do have to recognize that we do have another lower high forming as well as lower lows. So if you take these lower highs and these lower lows, you can see that the SPY ETF is still trending downward. And because of that reason, we have to still be in a bearish defensive mode where we don't want to put too much long exposure on this market until we break out of this bearish trend. So let's do a quick look at the 1 hour chart. We have this gap opened at $329 all the way up to $331. And we do see that that gap acted as support today, and we did come down to this $331 level and bounce. Now, this is not a lot of data to look at, but on the 1 hour chart, it does seem to appear that we have started to form a lower high, and we are still holding up above this gap as support. So going into tomorrow's price action, it'll be interesting to see if the price action can bounce off of this gap and come up here and try to form that higher high, and maybe we can start trending upward in a bullish trend. However, right now, it's not looking great for the bulls because we still have this lower highs on the daily chart. Now, it's not too late for the bulls to snap this bearish trend. We could still get a close up here above the 20 simple moving average and get that 5 EMA to cross back above the 13 EMA. But we still do have resistance at 342. And if we come up here and get rejected and start heading lower, we still will have a bearish trend and we'll still have a failure to form that higher high. But right now we need to trade with what's in front of us, and that's that 20 simple moving average, and we want to see that 5 EMA start to break back above that 13 EMA to show that this bearish trend is starting to reverse into a bullish trend. So while you could be accumulating a long position down here at these price levels, I wouldn't go all in because we still have a bearish trend that we have to recognize. And when we're in a bearish trend, we want to be more defensive. Just a quick point to illustrate this. If we go all the way back to 2018 of October, and we had this really nice ABC correction here where the market came down, bounced, and then came down and finished a C wave, and we started to head back up. We see here that we failed to form a higher high. And that told us a lot of information about the market because it showed us that the bulls were not in control and that the bears were still forming these lower highs and these lower lows, which ultimately led to a capitulation going into December where the price action went much, much lower before the bull trend started to reverse. And we saw that the market went back up. So there's no way for us to know what kind of market we're in. And while you could make a guess and set a stop loss, you don't want to go too far into this market just yet because it is very possible that we get into a situation like this where we see that this bearish trend remained intact for 3 months before we ultimately saw that bearish trend reverse. So going back to today's price action, that is fully what we're expecting to watch for. Is we're watching to wait to see if this trend will reverse and if we can break back above this $342 price level. Now, that doesn't mean you can't do any trading at these levels, but just be defensive and watch these support levels. So right now, if we break down below this gap at $331 or $329, you really don't want to be holding long because that means we're likely going to see new lower lows. However, if you are a buyer at these levels and you do set a stop loss below this area, if you are wrong, you will get stopped out and will continue to head lower, and you'll have that capital to put back to work at lower price targets. So right now, because we're in a bearish trend and we have the price action showing lower highs, we still do have a price target at this 1x Fibonacci extension level of $315. So that's what we do on this channel. We identify the trend and we follow the price action. And right now, we still have reason to believe that the trend and the price action are heading down to the $315 target. If we break down below 315, our next level is still at 305. So in these times where we have volatility, it's a great time to be trading, but if you're not sure what you're doing, you're better off just waiting for these price targets, and let's see if we can get a trend reversal after we get down to these areas. Now, one interesting thing to note is that the volume was extremely low today, and we see that the volume was one of the lowest volumes we've had going all the way back to September 15th. Now, that could be because there's the debate tonight and the market's just waiting to see how that debate goes, but we do have this gap below us, and we do have lower volume on a down day. So that doesn't really tell us a lot of information for the bulls or the bears, because we didn't really see a lot of selling or a lot of buying. But right now, with the bearish trend and the price action closing below the 20 simple moving average, I'm going to give benefit of the doubt to the bear case, and we're going to expect to at least see this gap close at the $329 level. Next up is the Nasdaq 100, and we're looking at the QQQ ETF or the triple Qs, and we see with the Nasdaq 100, we also do have a gap open below us. So if we go to the 1 hour chart, we can see that this gap started out right about $272 and goes as high as about $274. Now on the Nasdaq 100, we do see on the 1 hour chart that we did start to form a higher high here, and we also do have to recognize that we could start forming a higher low. So if the Nasdaq 100 could come in here and find support at the bottom of this gap and come out and form another higher high, that will be a great sign for the bulls that they're possibly reversing this bearish trend. Now, if we go back to the daily chart, we see that that 5 EMA is right on top of the 13 EMA, and it's dangerously close to crossing over to the bull side. So if we can get a close above the 20 simple moving average, which we just barely failed to do today, and we can get that 5 EMA to cross back above the 13 EMA, that'll tell us that the bearish trend is reversing into a bullish trend, and we could possibly go long on the Nasdaq 100. Now, if we want to be really sure that the trend's reversed, we'll see that 5 EMA cross back above the 13. We'll get a price action close above the 20 simple moving average, and we'll also form a higher high above the $281 price level. That will give us a lot of confidence that this market is going to go back into a bull market, and that will tell us that this ABC correction is likely over, and that bullish trend can start to continue, and we could start to see new higher highs. So remember, we are still in a bearish trend with that 20 simple moving average coming down here negative, and we are still closing below the 20 simple moving average. So we still do have support levels at 272 and down here at 261. And if we break below 261, we're looking for $259 and $250 to hold up as support levels before ultimately seeing if this correction is going to be over. Next up, let's take a look at the Dow Jones Industrial, and we're looking at the DIA ETF, and we see that the Dow Jones went down minus 0.54% today, and we did close right above that 50 EMA. Now let's jump over here to a 1 hour chart, and we see we also have a gap on the Dow Jones, and that gap opened up at $272 all the way up to $273. So we do have that short-term higher high on the 1 hour chart, and if we go to a daily chart on the Dow Jones, we see that we still have lower highs and lower lows, and we still have that 5 EMA trading below the 13 as well as the 50 EMA. So we still have bearish price action closing below the 20 simple moving average, and we still have a bearish trend on the Dow Jones, and we now have two gaps below at $272 and $264. So on the Dow Jones to snap this bearish trend, we need to close back above the 20 simple moving average, and we also would like to see the price action come above and close above this 282 resistance level so we get that higher high on the daily chart. So overall, if I had to rank the three indices, I would say that the Nasdaq 100 is the strongest, the SP 500 is the second strongest, and the Dow Jones is by far the weakest. But overall, all three of these markets still have that bearish trend, but the Nasdaq 100 is by far the closest to snapping that bearish trend, and maybe the Nasdaq 100 will lead the way on ending this correction and resuming that bull market. Now, it is also worth noting on the S&P 500, don't forget about this magenta resistance trend line and how that has typically caught the high points of the market. So with today's close going back up to that magenta trend line, we're about 6.5% away from getting to those crazy high valuation price targets again. So it's hard to believe that the market's just going to go screaming back up to new all-time highs unless there's a really good reason for it. So we still have to acknowledge that all three indices are in a bearish trend and we're still getting bearish price action. However, we could still be getting very close to seeing a reversal on that on the Nasdaq 100. So let's go ahead and check out the VIX, which is our fear indicator, and we see the VIX closing up about 0.3% today, and it's really just taking time to consolidate its recent run up where it went into the high 20s and low 30s, and now we're down here around 26 on the VIX. So 26 is still an escalated level for the VIX, and we really like to see the VIX get down below 23.5 to see fear start leaving this market, and we really want to see the VIX go lower if we expect to see the market go higher. So right now it's still too soon to say that the VIX is going lower, although we are starting to see positive consolidation in the VIX, and it could break out to the downside or the upside. So with the presidential debate coming up and the election, it's possible the VIX is getting ready to go back into this higher values as uncertainty comes back into this market. And if we see the VIX elevating, we're going to expect to see the stock market to continue to decline. So let's take a quick look at the sectors driving the market. And the first one we're going to look at will be the financial sector. And we do see the financial sector closing down minus 1.25% today, still in a very bearish trend with that 5 EMA way below the 13 EMA, and we still have lower highs and lower lows on the financial sector. So it's hard to believe that the stock market is going back to new all-time highs while the financial market is in a bear market, and we're going to remain bearish on the stock market as long as the financial sector continues to struggle like this. Next up is the industrial sector, and we see the industrials closing down about minus 0.9% today, and we still do see that 5 EMA trading below the 13, and we did get a price action close below the 20 simple moving average. So while the industrials are looking stronger than the financials, they're still in a short-term bear trend, and we really would like to see that bear trend snap and turn into a bullish trend before we start becoming more bullish on the stock market. Also remember, on the industrials, we do have this gap at $72 below, and we're fully expecting to see that gap close. Next up is the healthcare sector, and we see healthcare also still in a very bearish trend with that 5 EMA way below the 13 and the price action continuing to close below the 13 EMA as well as that 50. We see that that 50 EMA is holding up as resistance, and we can tell that by the wicks coming up to the 50 and the price action closing below. We also see that 20 simple moving average looking very negative and heading down, which tells us that this bearish trend is picking up momentum. And the more negative we see that 20 simple moving average get, the more likely we're going to see significant lower price targets. Next up is the US dollar, and we're looking at DXY. And we see the US dollar really just consolidating its gains and getting ready to form a higher low. So remember, we're expecting the US dollar to go up in this higher high and higher low fashion, and we could see the US dollar come all the way back to our support trend line before finding support and bouncing higher and forming another higher high. So right now it looks like the US dollar is still very bullish, and we do see that the price action is starting to close above the 13 EMA, but it still could come much lower to the 20 simple moving average as well as our support trend line and still form that higher low. So the US dollar could continue to cool off for many more days and still maintain its bullish trend. And if we see the US dollar continue to strengthen, we're going to see the stock market continue to correct. Next up is gold, and we see gold having a nice bounce while we see that the dollar is taking a second to cool off. So what it looks like on gold is we did break down below support, and it looks like we're going to come up to support and test it as resistance and see if we can get rejected as support and come back down to our support line at $1,800 before ultimately we think we should be a buyer of gold at this level. If we can get a nice bounce off of support at 1800, that should be a great position to start adding some gold to our portfolios. In any event that the dollar starts to weaken, it would be nice to have some gold in our portfolios so that we could benefit from the spike in the gold price. But right now, I'm still fully expecting to see gold get rejected at previous support, and I would expect to see gold get down here into the 1800 level before we ultimately become a buyer of gold. Next up is Apple, which is our market moving stock, and we see Apple closing below the 20 simple moving average still 2 days in a row after coming right up within striking distance of it. We do see that 5 EMA curving up positive and looking like it wants to cross above the 13 EMA, but it's still too soon to say if it's going to happen, because if Apple goes down tomorrow, that 5 EMA is going to reverse and we're never going to see the crossover. So we still have this very large gap open on Apple, which brings us all the way down to a $96 price target. And as long as we have this bearish price action and this bearish trend, I'm still giving benefit of the doubt for Apple to come down and close this gap before resuming an upward bull market. So next up, let's take a look at Tesla, which is our FOMO stock. And we see here that Tesla is stuck in a nice triangular consolidation pattern, stuck between a resistance trend line and a support trend line. And we see that the price action is really just coiling up, getting ready to break out to the upside or the downside. So remember, when we get these consolidation wedge patterns, we don't want to guess if it's going to break bullish or bearish. We simply want to watch the price action and watch which direction the price action is going to go. So right now we're watching Tesla. It looks like it did find nice support on that 50 EMA, and we did get a nice technical bounce, and we are closing back above the 20 simple moving average. But as we know, when we're in a consolidation, we could easily see the bottom of the support trend line again before ultimately resuming a bounce and seeing if we could break out to the bull side. So Tesla is in a great consolidation wedge, and we could become very bullish on Tesla if we can break out of this wedge to the upside. I would consider a short trade from the resistance trend line all the way up to the previous resistance at $500. Next up is Bitcoin, and we see Bitcoin did bounce off of support very nicely right around this $10,200 level, and we are getting a close back above all of the moving averages. So on Bitcoin, we're really looking to see it come out and take out this previous high at $11,000. And if it can do that, look for it to come back up and test $12,000. And if we can get a break above $12,000, I think we should have a quick run on Bitcoin back to the $14,000 level. So going back to SPY to summarize the price action, it looks like we're still in a downtrend, and we still need to be patient before we get too aggressive on the bull side of this market. Look for this gap to close to the downside. And if we can find support at this gap and start forming these higher highs and higher lows and take out this previous high at 342, we will get bullish on this market yet again. But right now we have to trade with what's in front of us, and we do have to recognize that we still have those lower highs and lower lows, which ultimately make us defensive as long as we're in this bearish trend. So that's it for tonight's episode. Please remember to help me out by smashing that like button. I really hope these videos are helping you out. And if you haven't already subscribed to the channel, go ahead and do that now so you can follow along with all of my technical analysis updates. Thanks for watching, everybody. And as always, I will see you in the next episode.